So my style of trading using Outlier is called the golden ticket trading strategy. And now you're ready for it, right? What is the market telling us? Well, we have the SPY confirming the 10 over the 20 price over the 50 today. It was flirting with it the last couple days, flirting with it, right? It was two kissing cousins taking each other out, not really sure what they were going to do, but they decided today to make it official. They decided today to make this kissing cousin thing official. And we have a bullish trend. I know that's weird. Shut up. I know. I'm trying my best here. So we have the 10 over the 20, prices over the 50. We can see all that right here. So this is a giant, giant hurdle that we have been fighting for months at this point. When was the last time it was crossed back bullish? Since February 20th. February 20th until May 1st, we had a bearish trend. Today, officially, bullish trend. Will this last forever? We don't know. I'm not the channel you come to where it's $75 in this one stock and you'll be a millionaire by the end of the year. This is not that channel. This is actually realistic trading because I actually trade. And finally, people are watching my content. It only took me 2,000 videos on YouTube, and all the receipts are on YouTube. You can go watch it. All 2,000 videos are there to see what I've been doing for years and years and years. But now you're here, and that's what matters. So we have the 10, 20 over 50 bullish trend right now. We're good to go. Next, market breadth. This has me worried. This has me worried. If we go to market breadth, what market breadth is measuring is how many stocks are on our bull list with buy signals. So today we've got stocks like BCE Inc. We've got Bentley Systems Incorporated, Checkpoint Software. We've got Dole. I guess that's bananas. We've got Expeditors International of Washington. We've got HCI Group. We've got Canova, and we've got Medifast. We've got 73 new buy signals today and 136 new sell signals today. So you can see right here, there are more sell signals than buy signals today. So why that matters is when we go over to market breadth, my rules dictate that once we go over 75% bought, which we did on Friday, I'm okay with putting on new trades until it peaks and then comes back down. So it went from 75 on Friday, 78 on Monday, 80 on Tuesday or Wednesday. I've lost track of days, sorry. And then today we're down to 78. We're down to 78 today. So we went up 69, 75, 78, 80, and we're down to 78 today. Because of this peak and come back, I want you to consider this like the market cycle. Now, one of our awesome Discord members put this slide together, and this is exactly what's going on in market breadth. It's very, very, very cyclical. If you zoom out a little bit, you can see it's over and 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 over a cycle. Over and over and over and over a cycle. And it's the euphoria, the complacency, anxiety, denial, panic, capitulation, anger, depression, disbelief, hope, optimism, belief through euphoria, and it repeats, right? This is the market cycle. This is what is shown in the market breadth right here in Outlier. It's so cool to see that. And you don't get this anywhere else. And you've got all these people screaming buy up at euphoria and all these people screaming sell down here at anger. And we went from hope, optimism, belief to euphoria real quick, right quick, right? If we zoom in, we went from hope, optimism to euphoria real quick, right quick. And that is why when it pops over like this, you could probably, honestly, you could probably draw the market breadth chart on top of this and it would work perfectly, right? So this is 50, this is 75, this is 25, right? And you can see this looking a lot like this right here. It's not really showing. It's not zooming like I wanted to. There, that kind of works. You can see this looking a lot like this, right? So we're trying to get out of here. We're trying to get out of here and get out of the way because I'm telling you, a lot of people on a day like today, they're going to be like, oh my God, buy everything. You got to buy everything. You have to buy everything. And my concern is that we went from hope, optimism, belief to euphoria, just like that. So I could see a lot of people selling out. And this curtailing itself back down. Now, does that mean it's going to like plummet back down? Probably not. You know, there's a drawing tool I'm looking for. I'm still getting used to TradingView. It's the one that has like a projection kind of. ABC pattern. This should probably work. I could see something like this going on. It's not going to let me go more than D. Okay. But I could see something like this going on. In fact, why don't I just draw it on here? This will be easier. I could see something like this, where we flirt around with the 50-period moving average before going back up for a while. So that's what Chris thinks. And that's why Chris has this rule that when it peaks on breadth and comes back down, that's where I'm ready to get out. And my rules have me look at not just the market breadth, but also the sector breadth, right? Market breadth and sector breadth. Now, my rule is if the sector breadth and market breadth both turn, close trades. Now, looking at this, the market breadth conclusively has turned, right? Conclusively has turned on market breadth. And if we go to the communications sector, which is what my one trade is in, AT&T, we can see conclusively, this peaked and has turned as well. It got up to 87.5% and is now down to 81.6%. So to me, this is screaming, sell everything. Close everything. My name is Christopher Uhl. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. But real quick, before we get into closing today's AT&T trade, we got to talk about OutlierDeal.com. Today is the last day. Midnight tonight Central Time, 11:59 p.m. Central Time is the end of OutlierDeal.com, where you can win $1,000 and a free year of Outlier if you don't mind sharing with us a few things, sharing a few things for us, right? Like I say, you have 9 hours from the time we're recording this, 9 hours until OutlierDeal.com closes, and the winners will be announced tomorrow. Tomorrow afternoon, I will announce the winners for OutlierDeal.com. Grand prize, Outlier 3.0 free for a whole year, plus $1,000. First runner-up gets $200 worth of Outlier merch, plus my 5 favorite trading book bundles. Second runner-up gets $150 worth of merch and my 5 favorite trading book bundles. So again, if you haven't done it already, OutlierDeal.com. We have 13,000 entries. Can you believe 13,000 people have entered for this? I am so stoked. So stoked. So that happens tomorrow. Don't forget. And I want to share a couple of member highlights real quick from our Discord. So let's go into the Discord, and right here, Darvian. I hope you're watching live. First trade using the golden ticket trading strategy. Got to leave for work, so I couldn't wait till the end of the day to close, but a nice profit. So he had 1.21% on his portfolio. His win on this trade was 14%. So this is what's important. And I'll share my numbers as well when we get done. But 14% win versus 1.21% year-to-date win on the portfolio. What he did right here is position size correctly, right? When you see, oh, it's only 1.21% year-to-date. Bro, do you realize the market is down? How many percents is the market down year-to-date? How many percents is the market down year-to-date? Hold tight. Still haven't figured out my trading view settings, why it comes out weird like that. Let's go to the year-to-date. Started here. And then let's measure from here to here. The market is down 4.37% as of right now. So at a positive 1.21%, he has a alpha of 5%. Alpha meaning how much is he outperforming the market? He's outperforming the market 5 percentage points at this point. Not bad. Not bad at all. So congratulations to you, Darvian. And of course, we want to hear from you and how you are using Outlier. We have thousands and thousands and thousands of messages just like that inside of our Discord. And tomorrow afternoon, not only will we have the Outlier deal winner, but we'll also give away a $10 Amazon gift card to some lucky winner who posted in there this week. So be sure to share your stories in the Discord. And first rule of Outlier is you tell everybody about Outlier and hit the like button. Now back to trading in the Outlier trading room. What is Outlier and how does it work? Outlier shows you, or old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. And Outlier shows you when investors are acting rationally fearful or greedy and by how much, allowing you to get into the stock before the Outlier move happens. And if you're ready to save time, make money, and start winning with less risk, be sure to head on over to Outlier.com where you can get the annual pass for just 82 cents a day, which is 64% off the monthly price. And if you're on a monthly plan, click this button already and save 64%. Now, you're probably saying, but Chris, you just got into this trade. Yeah, I did. That's part of the game, right? Because I don't know how much I'm going to make. I have no idea. I have no expectation in my trades. I have no profit targets. I just have a plan to get out when one of my exit signals is hit. That is today. So before I'd even look to put on new trades, which I won't be putting on new trades until we see that cycle turn over on market breadth. So it could be a week, could be two, and that's okay. Until we see that happen, I'm not going to be adding new trades. But before adding any new trades, I always look to reduce risk. So we're going to take this trade in AT&T off. I'm going to talk exactly through it, every bit. We're going to talk about how much profit I made on it in percentage terms, because that's what I care about. Percentage terms are universal. And then I'll be going through your Q&A in the chat, and then I will also be sure to look at some of your stocks in the chat as well. So if you have any questions, go ahead and put them in the chat. And but don't load me up on stock symbols until we get through that yet. So I am in the 26 calls in AT&T. Current price is around 182. So for me, I do everything in lump sum. If I'm going to buy it all, I'm going to sell it all at once. So I'm going to close my full position at AT&T. I'm going to start at 182 and see if I can get filled. All right, that's working. Let's look on the 5-minute chart. We're not closed yet. It's still working. Let's see if it's peaking up or peaking down on a 5-minute chart. That'll tell me if I need to get more aggressive or less aggressive. All right, tells me I need to get more aggressive here. So we're going to pop that down to 181. Replace 181. Filled. Everything is gone just like that. Trade price was at 181. Okay, so I'm out of AT&T, out of the 26 calls for $1.81. So for me, where's 181? So that was a 15.83% return for me. And that grew my account by 1.3%. So, wow, Chris, you grew your account 1.3%. Yes. While that doesn't sound like a whole lot, it's a 15% win on the portfolio, or I'm sorry, on the trade itself. So let me send this out real quick, the close that I did. And then we'll talk about the math behind this. So today is the May 1st, 2025, closed T 5, 16, 26 calls for 181. And the reason why I closed it was market breadth and sector breadth and negative. That was a 15.83% win after fees. Win, which was a where did it go? Hang on. 1.3% account impact. Okay, so this is what my gains look like right now. Year to date, I'm up, better than the stock market right now. Granted, I've only put on 5 trades so far. So I have a 60% win rate in 5 trades, and I'm up for the year. I'm okay with that. I'm very okay with that. When the market is down 4.21% and I'm up 1.15%, that means I have an alpha of 5.36%, the difference in my returns and the stock market returns. So, of course, on only 5 trades, can't really do a whole lot of analysis on only 5 trades. But of course, we're just getting started. So I also want to point out, look at how my portfolio popped up and then basically went back to flat while the market did all kinds of stuff, right? The market was super volatile, super down. I sidestepped that entire move. If you were following me as a outlier, you sidestepped this entire move down by holding cash, and now you get to go build your account back up instead of having to build from a negative position, built from a flat position. Makes it a lot easier, a hell of a lot easier. So let's break down the math behind this. So I entered when it was $1.56. So actually, let's do this. This will be easier. Well, maybe not easier, but more interesting. By the way, can someone tell me why when I switch from 5-minute view to daily view, it looks crazy, but if I switch from one chart to the next, it looks fine? I don't understand that. It's annoying to me, and I'd like to fix that. Okay, so I purchased it at 27.31. Price at exit was, let's call it 27.66. Okay. During that time, the stock moved how much? The stock moved 1.27% or 35 cents. So the stock moved 35 cents or 1.27%. My options return just gave me 15 point what? 15.83%. The stock moved 1%. My options moved 15%. Do we see the power of options? Do we see the power of options? Now, let's also work on the position sizing spreadsheet because it gets even betterer, even more betterer. This is why I do it this way. So we're going to focus just on AT&T. And let's say, for example, you had a $100,000 account and you wanted to risk 5% per trade. And you put on the trade and it was $1.56 at the time. You would only have 6.55% of your portfolio in the trade. 6.55% for how many contracts? 42 contracts, right? That's not bad at all. 6% for 42 contracts. And you made 15% on that return. So pretty sweet, right? But had you bought stock, your position size would be 93% of your portfolio. Right? So you couldn't have done anything else. Could have had one trade. Could have one trade. Nico says, yes, but what's the catch? The catch is the decay, right? There is extrinsic value. That is the catch right there. You have to be sure you make these moves before the extrinsic value works against you. Plus, I went deep in the money options. These are leveraged investments. These are not YOLO calls. And I would venture to say that I just made more on my deep in the money call than somebody with their out of the money call. Somebody with their, maybe they had a 29.5 or maybe even a 30 call, right? Sure, you could have bought boatloads of them for 3 cents. But did you actually make any money when you did? Probably not. So that is the math behind it. While the stock went up 1.27%, the option grew in value by 15%. So in fact, we can calculate what our actual delta was. And actual delta meaning, hang on, we're gonna get really nerdy here. So I generally put on trades at an 80 delta. 80 delta means that for every dollar, let's do 0.8. For every $1 that the stock moves, your option moves by 80 cents. So generally it's around the 80 delta. I forget what it was when put on. You could go watch the YouTube video and figure out what it was. But the opening price was 27.31. We got out 27.66. Okay. Was 35 cents. Our option went from a price of $1.56 to $1.81. So the option went from 1.56, 1.81 minus 1.56, was 25 cents. So what actual delta was, so this was the actual change in the stock price, and this was the actual change in the price of the option. I got it backwards. Equals this divided by this. Our actual delta was 71.4. So for every dollar that the stock went up, we made 71 cents. Okay, but we only paid $1.56. So you multiply that by 100. So for each contract, it was $156 essentially. And so for every $156, it went up $25. So that's where that return came from. Pretty sweet, right? Pretty sweet. So that's what our actual delta was. Now, is it less than the actual delta was suggested to be at 80 delta at the time? For sure. But that's just life. Right? That's just life. Sometimes I've actually gotten it where the option pricing went absolutely bonkers and I got over 100 delta. It was like 104 delta. Sounds impossible, but it can absolutely happen. Graham says, hey, thanks for the 15% added to my account. You are welcome. You are so welcome. Okay, Phil says, you're not on automatic. On the right hand, thank you, Phil. Teach me. I'm not on automatic. On the right hand side scale at the bottom, A and L will appear over the mouse over. Okay. Auto. That? Oh, there's the A and L. Okay, so if I switch here to here, I don't like how it looks yet. I still don't like how it looks. See, that's so squished. I hate that. That's annoying. I never had this issue with TrendSpider. But either way, another thing for another day. Start dropping your questions in the chat and let me help you out here because I'm done trading for probably at least a week. And just like that, I added multiple 4 figures to my account. Just like that, I had a 15% win in the span of 2 days. Just like that. Did I stress on it? No. Did I have an expectation? No. Did I know where I was going to go? Not at all. I let the market tell me what's going to happen. And then I got out because I had a reason to get out. I didn't get out otherwise. Sean says 15% here as well. Many thanks. Cheers to you. Cheers to you with a Diet Dr. Pepper, my friend. Cheers to everybody. Mikey Mike says, what happens as the decay continues? Excellent question, Mikey Mike. So every day that goes by, this decay or this extrinsic value will decay. So right now, of course, you can see right now, option pricing is now at $1.87. Yes, I could have made more money. I could have, but I can't control that. I cannot control the very top, the very bottom, right? I can only go with my plan. So I don't want to stress on that, right? You can, of course, look back at this and be like, oh, if I'd only waited, I'd made 7 more cents times, 250 contracts. That's so much more money, right? You could do that. Or you could say, this is where I got out. This is where I get in. I'm moving on. Quentin just got out with 18.5%. Hey, if I made you money, if you learned something and I made you money, I am not going to ask you to. I'm going to tell you to. Go tell someone else about what we're doing. Go tell someone else about this channel. Just go tell them you need to start listening to Chris on YouTube for free because I just made however many dollars you just made. That's what I need you to do. That's what I need you to do today or tomorrow. Tomorrow's fine too. Oh, Nate made closer to 45%. Let's go. Mark Gariski, smartest man I know. One like you, lose one doctor. It must be Diet Dr. Pepper. I will not drink calories. No, sir. Only if they're in protein shakes. Hey, a soccer mom says, loving the easy 15% to the good in my account. You're welcome. Okay. I have saved a few questions. Please drop your questions in the chat. I got to leave in about 7 minutes, so I'm going to try and hustle through here, but I want to give you as much value as I possibly can. Sean says, does your trading platform or trading plan require an outlier buy signal first, like the crowd chart? All your indicators were intact for the 10, 20, 50, but buy signal came after it ran past the crossover. So this is for you to decide. And I'm never going to say buy here, sell here, right? I'm never going to be that guy. But what I'll tell you is follow your plan. So let's go look over on CrowdStrike real quick. So CRWD. Here we go. All right, so to the point that he's making here, when you see the green background, that means the 10, 20, 50 is already pointing north. You're already in a bullish uptrend. So here, Sean, Thursday, April 24th would have been the buy signal on CrowdStrike. You were getting less fearful, getting more greedy, which is what you want to see. Same in the sector. And the breadth was also increasing. So for me, that would have been a really tremendous choice to get in on April 24th. In fact, if we go over to this real quick, CRWD, April 24th, sitting inside lots of order blocks. So I know I would not have traded it, but let's find April 24th. Oh wait, that's a 5-minute chart. Hang on. See, I still got to zoom. This is so annoying. Okay, April 24th here. Right now, I know it can be scary to buy on a big move up like this, but look what happened after that. Right, at the end of the day, it's still up 5%. It's up $22 a share, dude, on that one signal. So, Sean, what I would suggest is take a look at CrowdStrike. Right, if it's already on a green overlay and then it gets a buy signal, that's what I want to see. If it gets a buy signal and then gets a green overlay, that's what I want to see. Right, that's what I want to see. You want to see the confluence of things working together. So great question and great trade as well. Theo, let's look at APP in short. So Theo, at this point, I'm not looking for anything short because we do have a bullish trend, even though this didn't work like I wanted to. There we go. We do have that bullish trend now. So I'm not looking for anything short. Where is this at? Here we go. and we're still sitting on a buy signal. APPN is getting more bullish, less fearful. The sector's getting more bullish. Bro, I would not be shorting this even with your money. Sorry, dude. David, do you recommend setting trailing stop losses, even if it has the potential to sell you out of position before it officially crosses into a bearish trend? Of course, David. So let's do let's go back to CrowdStrike. Of course. So for example, I like the 10 EMA as my trailing stop. So let's just draw a line on here. Oh, hang on. We're going to do this. I found this the other day. This is so cool. So TradingView has this thing called replay. Check. This is so freaking cool. I love this. This is such a wonderful teaching tool. So let's say, for example, that today is Monday, January 13th. And you're looking at CrowdStrike and you're like, well, maybe, let's see. And then you can see it starts crossing over. You've got this bullish trend right here. And you're like, okay, I'll buy some here. I'll buy some here. And then as time goes on, wait, did I buy it? Go. I thought I bought it. Sorry, I must have messed up that up. But anyway, as time goes on, you've got your trailing stop. Let me push pause. Maybe I did that the wrong way earlier. But your trailing stop can be your 10 EMA. I always say use the 10 EMA as red light, green light. So if it goes underneath the 10 EMA, that is where I would get out. But look at this. The 10 EMA is running up with you. And so let's continue on. In fact, let's make this go a little faster because I want to be sure to answer as many questions as I can. And you can see it's moving on. Not once did it go under that 10 EMA until where? There. Until right here. If you were lucky, you could have got out right at the end of the day right there, but definitely right there. So this is what I like to call red light, green light. And so if it crosses the 10 EMA, consider that a green light. If it crosses under the 10 EMA, now again, if you were on top of it, you could have got out right here. But let's say you got out on this one over here. That would be your red light. And then you can keep everything in the middle. You can keep everything in the middle, right? That's 13%, 13% on CrowdStrike right there. Now, I always say that the bottom 10% of a trend and the top 10% of the trend, you're never going to catch. You're never going to catch the top 10% and the bottom 10%, but you can definitely catch the 80% in the middle, just like we showed right here. Fantastic question, David. Thank you so much for that. Richard, can you tell me more about trading into earnings? How many days before you tolerate earnings and after earnings? So, let's see. I know a couple of these I looked at over here had earnings. I gotta run. Okay. Richard, I'm sorry. You're going to be my last question today. And everybody else, I apologize. I didn't get to you yet. Let me take off replay. Yes. Sorry, my wife is still recovering from surgery, so I have to be dad taxi to both of my kids today, which means I got to run faster than I normally do. Okay. So earnings happened on this candle right here today, the today candle. Okay. That's why I didn't trade it. Now, for me, I do like to trade up into earnings. And this is a great example of why I like to trade up into earnings. If it sets up and I've got 2, 3, 4 days, yeah, for sure. Why not? This would be great. And it showed to be great running right up into earnings. Now, after earnings, what I like to do is, I mean, I'll still take a trade after earnings. I don't have like a set, oh, I'm not going to trade until X number of days after earnings. What you need to be aware of with earnings, I want to show you in Celsius and I want to show you in Palantir. Celsius gapped up 30%, 30% it gapped up right there. Giant move. And then the bottom of the candle was right here. Within 3 days, the bottom of the candle was gone. So this would be called a gap and crap. Now, it recovered later on. That's fine. But this is what's called a gap and crap, where it gaps up and then comes back down. And then we can go to AT&T, which I just got out of, had a fantastic gap and go, right? So it gapped up. Here's the bottom of that candle. You can see it never came back to the bottom of this candle, and it went. And it went. So that's an example of a gap and go versus a gap and crap. And of course, whenever we're looking to trade, we don't know what's going to happen. So you need to have those rules in place to keep your risk as tight as you possibly can. And if you're ready to save time, make money, and start winning with less risk, YouTube wants you to watch one of these 2 videos. And I want you to have a fantastic day. I'll see you tomorrow morning. Talk soon.